welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Buck, 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 buck. Joshua's going Lambo shopping. Wow, there you go. Actually, I guess did Litecoin take off? I see lots of people posting about Litecoin going crazy here. Anyway, welcome back to the frivolity. Here we are, the 2nd of July. So we finally made it into that July holiday long weekend. I don't know, maybe should I be a little bit closer? Does that help? And I don't know whether I cut my head off of the video. I think my top of my head disappears. I don't know how to change this without screwing everything up. So I got to go back. I got to slouch. Of course, grade 3 teacher. She's going to love that. And then you got to move the green screen over. I'm just butchering this. Anyway. So I've been talking to you guys for quite a bit recently about how you sell in May and walk away, and usually the seasonal week period carries on through to the July 4th holiday weekend. I got a sneaky suspicion somebody sent a memo out about a week or so ago to launch Bitcoin higher, and then it turns out it was all just a load of horse hockey. I wouldn't be surprised, to be honest with you, that I often see happen that sort of rant away. And keep in mind, I'm probably like a very typical sort of, well, I think this is going to happen. I think that's going to happen. And, the higher ups sort of listen to this. And if they see a whole bunch of people saying, hey, I think Bitcoin's going to go up, what do? They manufacture the market to go the exact opposite direction. Sometimes it's a bit dangerous getting into the prediction game, especially when you're have some sort of social media presence, because the bots, of course. When I was a prop trader, what was fascinating was we used to have guys who used to trade fib levels, and then there were people that build bots based on the fib levels. Well, if that mountain man guy always buys 61.8 and he's always making money, well, I'm going to go and build a bot that just buys 61.8. Then you see that other guys build bots that go, well, if I know somebody's going to buy that 61.8, and I know that they typically risk 8 ticks on a trade, well, I'm going to sell that 61.8 and keep selling until I can drive the market down a good dozen ticks from that level to stop all those people out. And then it just goes back and forth, and it just becomes a feeding frenzy. So that's sort of what I think is going on here right now. There's a hell of a lot of people looking at the market. And if anything, I think this whole sort of BlackRock news that sort of started this dead cat bounce rally out of thin air, I think is actually a completely manufactured news. It's not really news. If anything, probably SEC and BlackRock themselves already knew that the SEC would put the kibosh on any kind of spot ETF. And we've talked lots about this before. I won't go into it, but if you like watching Tyler, I think his name's Tyler, correct me if I'm wrong on that, the Chico Crypto guys, they talk lots about the very unscrupulous behavior over there at Binance, and also maybe a little shenanigans going on there with that Tether thing. So it doesn't surprise me that the ETF was the spot ETF. Once again, they put the kibosh on that. It is interesting how they do have an ETF that operates off of the US listed futures markets. So in a weird sort of way, that's almost like the USO ETF trades off of the futures prices for crude oil. So not necessarily a spot market ETF, but a market that's more dominated by CFTC regulation. And actually, we talk a lot about that. Frankly speaking, I think if the higher ups had their way, I think they would prefer just to keep it that way. And the proxy that we use in the stock market to follow that behavior is this BITO. And what does that look like? what are we supposed to think if we ever see the market smiling at us? So I wasn't really impressed with that. And that's it was interesting on that sort of news that the ETF was going to be rejected. The market just cranked all the way down. And if we had finished down here, this would have been a nasty outside downside key reversal. The fact that it actually was able to recapture these lows through the day and only really engulfed one bar, it is a very bearish chart pattern, no doubt about that. But it's not nearly as disastrous as a key reversal. Key reversal signals are just insane. And they often crush them, the spirit of the market. Anyway, so we'll see how this goes. I mean, it does make logical sense to me. There's some pretty big holes in the charts here that could use some filling in. And also, too, as I'd said, that rally that was sort of initiated off of the whole BlackRock sort of news was off of a V bottom. And if anything, what I'm seeing a lot of recently, which is a little bit bothersome, but it does goes to show that there's probably too many people paying attention to the market and trying to sharpshoot and snipe, is that I'm seeing a lot of sort of rallies off of V bottoms, which is really unsustainable. At some point down the road, we're going to have to come right back down and test this low again. What bothers me is the bottoms are V's, and you can see this was a V. It went up and then rolled right back over and had to test the low. We rally up here, and that's not a V, folks. I mean, that's a very well-defined M. Up, down, up, see you later. So we'll see how we did. Based on a clothesline basis, it wasn't that bad. If anything, you might make the argument, coming back from the holiday weekend, if you see the market close, even really trading in earnest below here, then that means we probably are continuing down. And I put out, and that's in the short term, of course, and I put out sort of messages. We'll get to it in a bit when we talk about the newsletter. I put out notes that on the lower time frames, actually, things do look like they're pointing lower. But at the same time, too, we do have some conflicting signals. So I wouldn't say this is easy peasy. In fact, I would actually say this is a difficult trading environment. Let's put it that way. All right, so we've got our newsletter. Chris, did you publish that? Do you have like that tiny URL kind of thing for that newsletter yet? Can I push it out on the screen here yet? All right, so I just wanted to put it on the screen. So where did you send that to me in a DM? All right. There I see the paint document. Good people at YouTube are seeing this. That's good. We put together a little one pager that I think sort of summarizes what's happened in the past week and anything that sort of jumped out at us. And really, the purpose of this video, I think, number one, is I think I like the idea of just reviewing this little one pager. Should take maybe about an hour or so. And it gives you a pretty good idea of what I'm sort of thinking, seeing in the market. Whether it's right or wrong, I don't know. It's just Brian's opinion. And then we spend the second half of this show. Ideally, this show should be a couple hours. Spend the second half of this show answering any questions from current students. Although I'm a little surprised at the lack of questions. I also noticed it too. It's a very different world now. I don't see nearly as much engagement from sort of new people. And I get the feeling that, Mr. Powell, he's publicly said that he would like to inject a lot of pain into our lives. And I think sort of on the margin, like 5 years ago, people had a couple $1,000 lying around. Maybe they're working, saving some money. Cost of living's not so bad. Rent's not so high. Food price not that bad. Transportation's not that bad. All of those categories now are a nightmare. And I think Joe Sixpack right now is having a little hard times, putting two nickels together. So if you are feeling liquid right now, congratulations. I think you're the exception, not the norm. And I think that the Fed down in the States would like to see more pain rather than less. In fact, that's sort of the lead statement from our newsletter. So where's that newsletter, Chris? You got it? You got it yet? Are you here? All right. Yeah. Josh says survival mode for most. I would imagine, it's just kind of a tragic, but I would imagine that it's going to be a bit of a tough slog here the rest of this decade, no doubt about it. I still mean I still think that there will be bull markets. I mean, it's just markets go up, markets go down. If anything, I think that the powers that be want to break the market, and then once they actually see that they've broken the market, then the stupidity starts all over again. And the irony of all this is, I hope you all see that this is basically just happening right on cue. When should we expect Bitcoin to bottom? Let's see if anybody can remember. What's our knee jerk, out of the box rule? Every 4 years, you can pretty much set your watch to this. And I mean, it's just so bloody cliche. So let's just see whether anybody feels like jumping through any hoops today. When should we expect Bitcoin to bottom? I mean, it's quite remarkable how consistent it is. Hey, there we go. Richard answered. Way to go. That's the kind of talk we want to hear. And ironically enough, Nori, usually it happens right around that time. There, 6 months happening. No, 6 months before the happening. Rush and Eddie, get off your butts and start typing. Damn you. They're the only ones in the hangout here with me today. And then, of course, as always, when the public comes out and says Bitcoin's dead. So we know, and this is where I often trip up because I'll try and put charts up here and talk my way through it, and it never seems to work. Well, let's see if I can do this here. Which is the best one? I think this is the one I like to use with you guys. I don't see anything new here whatsoever. Nothing new at all. Here's our fear greed cycles, 17 and a half years in duration. That actually shifted in 2018 into the next greed cycle. So ironically enough, us here at 2023, we're already 5 years into this greed cycle, which is quite remarkable, eh? Very simply put, if this cycle is like the greatest generation, all those people that fought in the Second World War, then we should follow this path. If this cycle is like the baby boomers, which I don't think it is, because the greatest generation, they were in the same part of the sort of money cycle and the interest rate cycle that we're in now. The baby boomers, they were in the exact opposite end of the money interest rate cycle. So as a result, they had relatively low debt, and governments didn't carry insane deficits, and they didn't have to hyperinflate economies out of the debt problems that we have. So as a result, equity prices could really outperform. In fact, the baby boomer cycle, actually, the hallmark of it was a falling interest rate environment, not a rising interest rate environment. So I think that we're probably going to follow the path more along the lines of the greatest generation. And I got to say, I don't look at this chart every day, but man, the similarity there is there. You can barely see it. Let's see if I can change the color so you can see it a little bit better. Hey, there we go. So there's the greatest generation. That'd be like George Bush Sr., all the people that fought in the Second World War. So in essence, and actually interesting, I wouldn't be surprised if the equity markets have to do this sort of sideways consolidation through 2023. And that, of course, sets up a huge bull run here over 24, 25, and 26. So that's a really cool image. Of course, all level oneers. This is basically what you're here to learn right now. Think strategic planning, eating your vegetables, all that kind of talk. And then specifically, if we drill into the various different cycles, and here is the stock market. This happens to be, there's the greatest generation. That's that one we just looked at, which is what I think we're more sort of in that cycle. Bumping along here, we got to get through 22, 23. And this, ironically enough, is actually what the Bitcoin price action should look like. I updated this back, actually interesting, that is January. So actually I should probably, when we're done this video, just fill in this, but we all know that price came back here a little bit and then up and down and up and down. So we're just sort of bouncing around a little bit higher here now. Interestingly enough, the yellow, of course, was the 16 through 20 cycle, and we bounced all the way right back up to 61.8 fib levels, and then had to come all the way right back down to the bottom, which actually set up like a Gartley pattern, which actually, interestingly enough, justified that huge move, because bullish Gartleys are usually very bullish. I am thinking that we're more like this teal study. Here is the Bitcoin price spread. We could probably do an updated one. Probably, like I said, I probably should update this. But I'm thinking more that we go sort of sideways through this 22, 23 bottoming window, and then come out the other side all gangbusters, ripping and roaring. But again, thinking, Bitcoin price usually bottoms about 6 months ahead of the halving event. That's actually the one that I wanted to show you. Let's see if I can find that. I think it's one of these. Well, let's do this. See if it's this one. Anyway, I always say we're never in a hurry, and then 2 hours goes by, and it's like, oh crap, where the hell did the goddamn time go? All right, so this is one that we haven't looked at in a bit, but basically there is that price action just sort of bumping along the side here. Here we are right there. There's the halving event, and really we should bottom about 6 months ahead of this event, but that's not the chart I wanted to show you. Where is the chart I wanted to show you? I always do this. It drives me crazy. Maybe it was this one. So many charts. There we go. That's the one I wanted to show you. So here's the 12 to 16 cycle. Like I said, I personally think we're doing this, but there is our reality now. So that's what it's looking like. There is happening events, and you can kind of see how, price bottoms here. There's the halving event about 6 months or so ahead of that halving event. That sort of went, okay, it's time to start getting super jazzed. So, we're getting awfully close. And I think the actual ultimate sort of 6 months ahead of the halving event's like October. So here we are in July, August, September, October. You got basically the next 3 months that your bottom should come in here on the Bitcoin price here. And then once that bottom's in, oh boy, get ready for the fireworks this coming cycle. Also, too, I don't know whether we can do this relatively quickly, but let's see. I wanted to just show you. I talk lots on the site about the cost of money. Hey, there's is that sort of the formal link for the newsletter there today? Oh no, what have they done to me here? heck's going on here? Invalid symbol. Oh God, remember it took me forever to build all these damn charts and they've gone and wiped them all out. God, TradingView. Ah, you bastards. Now what have they done? Oh God. Jeez, I have so much fun showing you these charts and then TradingView just goes and destroys. Just a ton of work that we put in on these damn things. Well, it's one exclamation mark. And these are old symbols. Yeah, you're right. But you can see study error. Oh, that's frustrating, eh? So I can't show you this. Anyway, these the powers that be don't want me to be talking to you guys about the money supply and the way the money system works, I guess. Frustrating. Oh well, maybe we'll have to circle around to this maybe in coming videos. That's kind of a bummer. I'm gonna have to put all those studies back together again. God, how frustrating, eh? All right. Well, anyway, well, we won't go down there. Anyway, the point of the matter here is we're coming to basically the end of the 4-year sine wave cycle. For the money cycle, God, man, I put so much time and effort into those charts. Holy crap. Tell you, it drives you crazy dealing with these silly charting services. All right, let's get back to what we're supposed to be talking about here today. So what's happened here in the past week? This is our weekly review. You can sign up for this newsletter, cute little tiny URL here. I think also Chris includes a link to this document and also to the sign up in the description of the video. So if you want to get this in your email, and then that way, you know, if you miss the live presentation, you've got this just waiting for you if you look in your email. With regard to the broader market, we started off the week actually with sort of the talking heads, if you will, kind of going on and on. Keep in mind that the central bankers will always act late. You all got an excellent education in how bad central bankers work in sort of real-time crises with that whole sickness. The sickness was a beautiful illustration about how bureaucracies, just the way the system is set up today, it can't function in real-time crisis. If anything, it's almost like it's 6 months delayed. And unfortunately, in this world, you know, the solution to the problem was as soon as the medical emergency was declared, there should have been a mandate from our democratically elected governments that represent the people and the citizens. There should have been a mandate right out of the gate. No one's allowed to fuck with the consumer. Everybody must leave prices exactly where they are until we get through this health crisis. Sadly, of course, that probably won't happen for maybe hundreds, if not thousands of years in this human species. I mean, you see the jerk going on there in Eastern Europe. We're still living in like barbaric human existence where one human being can literally be responsible for the death of like now what 500,000 humans just because of his ego. We have to evolve out of this. I don't know when the hell that's going to happen, if it ever can. But the bottom line here is with regard to the sickness and the way that our system is set up right now, it's set up, and even, you know, my country's government is a really good example of this. This government was put into place like literally 2 centuries ago. And 2 centuries ago, it was sort of the real-time reactionary sort of framework for a 19th century society, 18th century society. It's just way too slow and way too sort of top heavy to really clearly reflect the 21st century. How this actually evolves, ironically enough, I might even argue that things like the evolution of the blockchain and hopefully our society can move towards things like referendums in real time that are based on blockchain votes by people that can't get tampered with by third parties. Those are the kind of things that actually could eventually change this society into a more real-time reflection of our democracies, but they just aren't right now. So, bureaucratic reaction to a health crisis. They way under responded initially. And then unfortunately, the knee-jerk reaction, of course, in this particular society is we have to save the oligarchs. Whatever the oligarchs want, they get first priority. So you had all these, fiscal stimulus, bailout packages and stuff that really didn't help Joe Sixpack, but they definitely, bailed out Wall Street. The should we debate mortgaging our kids' future? Shut the fuck up and just give them all the money they want, right? All that nonsense that we saw in March of 2020. And you don't even hear anybody talk about that anymore. When I was probably your guys' age, we used to talk about things like $1 billion government budgets. Now, mysteriously, as I sort of got older, unfortunately, my wife passed, Bitcoin came into existence, housing crisis, and all that. Then all of a sudden they hyperinflated societies into the $1 trillion category. And now, Mr. Biden, he doesn't even think twice about saying now, now the deficits are going to be like in the tens of trillions of dollars. So, interestingly enough, I might actually argue that if you are a crypto enthusiast, if you are a Bitcoin enthusiast, then this is music to your ears. You don't want anything to change. This is how Bitcoin's going to be worth $1 million. And of course, anybody that can finesse the system, theoretically, if you have a fishing rod that can hyperinflate the price of fishes that you pull out of the ocean. But if you are stuck in the model and you have to shop at a grocery store and you have to buy fuel for your vehicle and you have to pay rents to the system, then, you're probably going to find a loaf of bread, $50. And I thought it was interesting that recently you've heard me barking about the hyperinflation in my country. And it turns out that they've actually uncovered that there was a price fixing scam in the price of wheat. So not only do we have like the health crisis, and then we have, the made up, supply chain issues. That's what it is. I mean, now I'm actually hearing a lot of people are talking about that. Actually, most of the inflation that you're seeing today is everything to do with just corporate profits and just making damn sure that, and it's funny, Woody Harrelson jokes about Pfizer and drug cartels and stuff, getting him, of course, shadow banned and all that kind of stuff. So you're not allowed to say certain things in this woke society. Is it really woke or is it just really hyper controlled by the 1%? Blah, 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 blah. Anyway, this is all, as long as this insanity keeps going, you crypto kids and people that are long Bitcoins, I wouldn't go spend your Bitcoins. I would just say, just keep squirreling your money away in Bitcoin because, it will be $1 million down the road here. It's almost like it's inevitable. And the irony of it all is we'll get to a point where $1 million is going to be cheap. And they're going to say, well, Bitcoin, $10 million. Well, Bitcoin, $1 billion. Well, why not? Billion takes $5 million to buy a loaf of bread. It feels as though we're heading like headlong into Weimar Germany. So I will say I am somewhat impressed by the banksters trying to get control of the money supply. You can see that in some parts of the world that they really are trying very hard. Obviously down in the States, the U.S. Federal Reserve is trying to rein in money supply, quantitative tightening, all that kind of talk. But like in my country, the guy who's actually running the show here, he has no formal education in finance. He's stunningly corrupt. He thinks in very sort of two-dimensional terms, and he doesn't understand how complex economies are. And his sort of very cookie cutter, oh, what would you have us do? We're going to go turn the printing presses on and never stop printing because that's the way out of the problem. I mean, that's like Zimbabwe. We all know what happened in Zimbabwe. It's exactly like what happens right now in Venezuela. We all know what's happened in Venezuela. Ironically enough, you could say, some people think that the leader of my country actually is a love child of Fidel Castro, but you could also argue that we're heading towards sort of the standard of living of a typical Cuban citizen. And I do find it interesting that, people talk about the BRICS nations and all that crap. I do find it fascinating that if you ask anybody inside Russia, if you ask anybody inside China, if you ask anybody inside Iran, hey, here's a green card. You want to go to the US and live the American dream? They will leave at a fucking heartbeat. It's like BRICS nations? I'm out of here, man. So, as Winston Churchill once said, democracy sucks. It's horrible. It's terribly corrupt. It serves the 1%, but it's the best thing we got. So be thankful that you can even at least speak your mind, because in BRICS Winnie the Pooh land and BRICS Vladdy land, you speak your mind like I am right now, and I could very easily lose my life like that. So anyway. This is a really tricky environment. I would actually make the argument that the powers that be in the United States would like to continue to contract and to try and bring the M2 money supply growth into check. But, this is like crack. So is it easy to and actually I heard another guy over the weekend, he even said it, a friend of his was down on his luck and he was like, oh, you know what, I'll help him out. He asked him, was there a bill or something that was going to put him over, and he was like, yeah, I need help with this. And he's like, oh, fine, here, I'll cut you a check, and done. And then literally that friend destroyed the relationship because he kept going back to his friend and asking him for more money and more money and more money and more money, and basically became addicted to his charity, which is a terrible, terrible thing. They always say blood is thicker than water, but money sure dilutes the shit out of that blood. And I could even say in my own personal family situation, I've been through that situation too. So I would actually make the argument that it's really easy for substitute drama teachers just to turn on the printing press. That's the easy solution. The only problem is we've gotten to the point now where the market's like, nah, you can't do that anymore. And if anything, I would show you M2 money supply, all that kind of stuff, euro dollar market. But like I said, Big Brother just went and fucked me, and I'm going to have to go and redo all my charts again to show you that image. But really simply put, the euro dollar market is the corporate interest rate market. And I don't know, man, let's see if we can even just do one here quickly. And as long as the euro dollar market is not happy, here's the Fed funds. So you can see they're kind of calming down. I suppose that's a good sign. The real question here is, and that's interesting. I wonder why did they euro dollar futures? Hey, what the hell is this? SED spread between the 3-month euro dollar futures and the 3-month SOF futures. What the hell? Can't I just get the euro dollar contract? Oh, goodness. Anyway, it used to be, there it is, euro dollar futures on Moscow. Oh, there you go. Oh, look at that. So I guess they, Big Brother doesn't want us following the euro dollar market anymore. Hey, isn't that fascinating? Those bastards. Anyway, I don't know what they've gone and changed the symbol, so I can't even show that. But anyway, point of the matter here is these guys are not driving the bus. If anything, it makes sense that they want to destroy the euro dollar, their Fed fund spread, because probably a lot of people were getting the message, oh, it turns out the Fed doesn't control the short-term interest rate market. All right, we know a quick way to fix that. Let's make it so that they can't see what the euro dollar market is. Bastards. Oh, well. All right. Anyway, back to this story here. I'll have to figure out a workaround on all that. Okay, so back to the newsletter. That's what I'm supposed to be doing here. Of course, it takes me forever to get through this. So, past week started off soft on talk from central bankers of the need for further monetary tightening. And you even heard Chappelle even said 2 times that he figured that there was still, actually, I think it was about 2 or 3 times he mentioned it in the ECB conference, that there was still a necessity for the Americans to continue raising rates, and he expected to see 2 more tightening before the end of the year. I would say we're getting closer to the end of that hiking cycle. Something in the world economy will break. Me personally, I think it's going to be countries like Canada that break way before something like the United States. I'd actually say the United States is in a pretty good position right now. If this had happened 10 years ago, right, US housing crisis, all that kind of stuff, then we'd have big problems. But because the US and the US banking system is actually in a very strong position right now, the demographic situation is getting resolved. The US households actually are relatively okay, relatively speaking, debt wise. I don't think the US actually does too badly coming out of this. But I definitely could see like countries like Canada, countries like Russia, countries like Australia, countries like South Africa. From what I understand, South Africa is an absolute shit show right now. Um, I any of the countries that were the commodity countries, the supermarkets of the world, they're going to have a pretty tough time, and those would be the places that I would expect to break first. So anyway, we'll see what happens. Halfway through the week, we sort of saw the market kind of firm up a bit, and then sort of the anticipation on Friday was there's a pretty important U.S. government report that was going to come out on sort of their preferred inflation gauge, the Personal Consumption Expenditure Index. This is keep in mind that these bureaucrats, these government bureaucrats, they've been basically told, look, you've got to try and print the lowest inflation numbers possible because a lot of government benefit programs, a lot of entitlement programs are, of course, indexed to inflation. So we've got to somehow figure out a way to get the inflation numbers printed sort of from government officials lower. So that way we don't have to spend more money and technically we don't go bankrupt. I think these governments are all bankrupt anyway. It's emperor's new clothes. And as soon as somebody actually says, hey, this guy doesn't have any clothes on, then the whole damn house of cards is going to come collapsing down. But they're not at that point yet. Thank heavens. The good part about it, though, is if that should happen, and I think that's half the reason why Bitcoin came into existence, is I think there are a lot of people in this world that needed an out. You could go and do the classic gold and silver trade. The only problem there is that I think gold and silver, they're just too overly owned by the public. Too many old timers bought gold and silver as the inflationary hedge. So there's too many people long. And as Hugh Hendry's often said, that trade's really crowded. And he didn't really like that trade. And frankly speaking, I have to agree with him. Judging by the lack of participation that I've seen out of the public with regard to things like Bitcoin of late, I don't think that the public actually really is long very much Bitcoin. Even now, 10 years into its story. I'd be curious just to see what sort of our Google searches for Bitcoin is right now. I know there's an easy way to do this. I don't want to get like a past image. I want to get like a real-time image. What is it? Is it, I can't remember how you do this. Anybody remember just off the top of your head what you type in here? Google Trends. Yeah. So what do I do? Do I trends.google.com? Interesting. Look at that. So Big Brother, of course, has already got me labeled. So it'd be interesting to actually see if oh yeah. Probably want to see substitute drama teachers bullshit nonsense, right? And actually, it turns out they went and passed all this legislation. So a lot of these social media outlets have actually started to turn the tables on Canada. So I don't even know if I can properly report to you guys what's going on in the world because we're almost as bad. You know, like Russia created this like shell within its sort of its internet, and you know, basically all Russians sort of operate within the shell. So it would be interesting to see if they do the same damn thing to Canada. So I got to tell you, pretty damn disappointed in our country and the way substitute drama teachers have completely turned us into some sort of totalitarian dictatorship here. It's just disgusting. Anyway, there are the searches for Bitcoin, and frankly speaking, and I don't know whether this is just local here in Canada or around the world. I wouldn't mind actually, like so it says USA past day. Can I see like maybe the past? Let's go 5 years. Yeah. So, you know, this image alone right here from a sentiment perspective, that's what you want to be buying. That's sort of like coming down into these kind of levels, right? Or maybe coming down into these kind of levels. This is actually when you want to be accumulating this stuff. Then, of course, when the public's all stupid, you know, there's, you know, guys going on Saturday Night Live, you know, talking about how wonderful they are just because they went and took over a cryptocurrency. And of course, mooned it because they basically bought up everything. Anyway, regardless, that's probably when you want to be getting out. So that in itself, I actually think that this is exactly what you would expect to see around 6 months prior to the Bitcoin halving, right? This is exactly what you want to see. So I don't think that there are that many people that are long Bitcoins. When I go back out into the public and I go, "Oh yeah, you long Bitcoin?" They're like, "Bitcoin? Oh, that was so yesterday. I'm not interested in that anymore. That's so old." So that in itself actually leads me to believe that we could still move up here a bit. Anyway, um, so where is the newsletter? Where did it go? Did I lose it? Darn. All right. So inflation numbers actually came in relatively tame into the end of the week. I don't think that the personal income and expenditure numbers, like personal spending, you can see. Market was looking for 0.4%, came in 0.1%. So this is exactly this whole the Fed is going to inflict pain onto your lives. So things like the PCE are calming down, right? Personal consumption expenditure. But the issue there is that we're already at a very heightened level. So it's kind of like, I don't know, let's say, you know, anything. Let's say you like going to the movies, right? And movie ticket used to be $5. Now the movie ticket's $10. So the theater now, month over month and year over year now, they're still raising it. Now it's $10.30. So it's gone up 0.3% in price, but it's still $10 compared to it used to be $5 just a few years ago. So yeah, the inflation rate itself is calming down, but all these prices are still hyperinflated. And what I do see, and I'm actually starting to see a little bit of it, and hopefully it catches on, because frankly speaking, if we don't want this whole fucking house of cards to come collapsing in on us, and then we go through some absolute Armageddon, because keep in mind, if our whole Western society collapses, like I don't even know if you know what's going on in France right now, but you could see these Western societies just start to dissolve into anarchy. And then, obviously that's going to give Vladdy a lot more ammunition to, go and be totalitarian dictators and all that kind of crap. So if anything, you kind of want to see, people calm down. But this personal spending number that you see right down here, this is the anecdotal evidence that the Fed is getting what it wants. It is inflicting pain on the consumer, and the consumer is slowly, begrudgingly stopping spending money. Because frankly speaking, given the higher rates for mortgage rates and the higher prices at the gas station, the higher prices at the grocery store. They don't have any money and it's gone. So the rate of inflation seems to be flatlining. I think that's probably the best way to describe it. And the consumer's dying 1,000 deaths here. I still think that this sets up one of these sort of K-shaped economies. So things like the NASDAQ, and in the 1950s, and I think it's going to be that kind of similar market state. They used to call it the Nifty 50 way back when. Things like the NASDAQ, high-tech stocks, they're going to be this generation's Nifty 50. I think that they can just keep marching higher. Facebooks, Amazons, Microsofts, Teslas, all that kind of fun stuff. At the same time, too, though, and it's interesting because our final news piece actually is an old economy kind of piece. I think there's a huge battle going on here between old economy and the banking system. And the old economy, of course, there's like 4,000 regional banks in the United States of America, and they actually make up a big chunk of this Russell 2000 index. So as I had said there a moment ago, NASDAQ booming higher, and you can see NASDAQ itself is threatening to break out to new highs here. We're not that far away, right? So there's the old highs. I mean, that's just a hop, skip, and a jump away. But something like the Russell 2000, whoops, can I pull it up here? Ooh, still pretty far away from its old highs. And FYI, there are a lot of bank proxies in this Russell 2000 index. So I get the feeling that we're in one of these K-shaped economies now, where there's going to be what they call the Nifty 50s, like I said, in the 1940s, 1950s, coming out of the Second World War. Procters and Gamble's, IBM's, Coca-Cola's, all those kind of names. They dominated the stock market all through the 1950s. And if you weren't invested in those 20 or 30 big names, you missed actually a huge portion of the stock market rally. And I think that's exactly the same thing that's going on here. So, it is what it is. It's going to be a bit of a challenge. But anyway, so it's interesting to see in our newsletter here today. But while we were getting this going, I saw Caitlin actually dropped a huge tweet thread. And I like listening to Caitlin because, she wants to basically create like a Bitcoin bank where we're going to hell with this, phony baloney US dollar thing, the hegemony, the money center cartel, Fed sort of thing. We're going to use Bitcoins, and we believe in the Bitcoin ecosystem, and we don't believe in the endless money printer system. And it was interesting. She's basically been going to war with the US Federal Reserve Board, which of course would like to put out of business all the regional banks and consolidate the banking industry. And I might argue that, if you are a crypto fan, the way that this battle goes, and Caitlin here should be like your number one champion, if you will, because she's a Bitcoiner and she's on the inside of the banking system. So if you want Bitcoin to survive and you want Bitcoin to be the future and you believe in this sort of, non-screwable distributed ledger technology, then Bitcoin or Caitlin here is your big fan, or you should be a fan of hers. And she dropped a pretty big bombshell here. And it's interesting how the feds were required by Congress to pass this information about the Fed's master accounts and who can be included and who can't. And of course, this is the way that these banking cartel are trying to control the banking system. If they don't like you, they're not going to give you a master account. But it turns out that actually banking, of course, in the United States is state regulated, and there's a bunch of states that are all sort of standing up and saying, You know what? To hell with you, you stupid Fed crooks. Um, if you are going to be a 100% reserve bank, none of this, fractional reserve lending bullshit nonsense, then you don't need to be a part of the Fed cartel, FDIC sort of control the banking system from the top down. You can just go directly to the states and get your 100% reserve banking license directly from states. And she's excited because there are more and more states that are signing on to this, which in essence pits this whole sort of, if there was going to be a way for us to somehow bring this reserve lending scam to task and actually try and rein this in, it's going to be from these states that basically force the Fed. The Fed has no choice but to grant these people access to the Fed's master account system, based on the fact that they're chartered by the bank, by the states themselves, not any federal system down in the states. So huge developments going on in Bitcoin here, and in the banking system. The problem here is this is so huge. I'm actually going to have to take some time and fully wrap my head around the implications of this. I mean, hats off to Caitlin for pointing this out. I mean, this is hugely significant to crypto kids. And if you believe in things like the Lightning Network, of course, you've probably seen from my crazy tweets that the ECB and all of those, like that guy that's as big as five of us put together. We always make fun of him. Anyway, crazy central bankster that eats his competition. If you believe in the ECB, like we started the week off with and that was our number one headline here. We started the week off with ECB officials label crypto as deleterious with no societal benefits. And we literally finished the week like this is the absolute worst thing you could possibly see out of sort of the 1% to put the kibosh on crypto. And we actually finished the week on the exact opposite end of the spectrum. That actually, you stupid central banksters that are all basically part of cartel, go screw yourselves. We're going to set this up and we're not going to do the reserve lending banking. And we're going to treat your deposits like it's your money, not the bank's money to do whatever the hell they want with it. And if you want to come and withdraw your money, then hey, the money's just sitting right there. This actually opens up Bitcoin actually doing everything that Jonathan actually sent to me. Although I'm terrible at finding these tweets right off the top of my head. But like I said, we started off with, oh yeah, crypto's evil. It's the worst thing that could possibly happen. And of course, the ECB and everything about like Christine Lagarde. I mean, a professional lawyer by trade. What the hell is she even doing talking about banking? And people actually listening to her going, oh, well, she knows what she's talking about. I mean, that kind of talk just makes me sick to my stomach. But like this kind of stuff, this is how we started the week. And of course, interestingly enough, we also started with the week with the central banksters cranking interest rates up in Europe and threatening to do more interest rate increases in North America. And yet we actually finished the week on the exact opposite end. And like I said, I was so shocked by this when I read this. I was like, holy crap, Chris, we got to include this in the notes here. Because it's quite literally, we started the week heading one direction and we finished the week heading a completely different direction with regard to crypto. And the whole idea that you may actually find that the movement towards crypto as a reserve asset, something like Bitcoin. I mean, shitcoins, I don't think we're anywhere close to being able to use shitcoins in this kind of conversation. But something like Bitcoin, POW coins, so things like Litecoin, There were a few other POW names that I saw caught a bit of a bid here later on in the week, kind of idea. I wonder whether they started to sort of sniff out that, hey, some sort of big bombshell is coming, that the Fed actually is losing its grip down in the States, and the States themselves are actually coming back and fighting back. And I was pretty darn impressed with this. So we're going to see how this goes. I actually make the argument, of course, obviously, if you had your head, you'd have to have your head buried in the ground or whatever to not appreciate the significance of the SEC and its sort of nonsense there through the past week. But the more I see this and the more I see what happened with regard to the Deribit options expiry on Friday, also too that BITO that I talked about there a few minutes ago, that had a huge options expiry on Friday as well. I get the feeling that actually this SEC news, it was we used to use the term in the stock market, a red herring. I don't know whether that's appropriate here or not, but I think that the SEC news and the whole, hey, we're going to think about floating a Bitcoin ETF, I think that was actually all just a smokescreen done by BlackRock and all that. Because of the amount of options that were going to expire in the money, if we use the weekly chart, that's probably the easiest. There were just a staggering number of both calls and puts on Deribit going either direction. And this sort of max pain event. And I think, Chris, didn't you do some short videos and stuff also and clips and stuff through the week on this? Yeah, I also talked about it on our Wednesday show with the Coinigy people. We talked about it at length through the daily briefs. I mean, so go back and watch all the previous videos from this past week and the little clips and stuff that Chris put out. I mean, there were just a ridiculous amount of options that were going to expire on this Bitcoin, whether it be on Deribit, which is out of Panama, of all places, and also the BITO, which is a U.S. listed ETF that trades off the Bitcoin futures. It actually made perfect sense that they wanted and they needed this market to go out at 30,000 here. Now, I'm not quite sure. Keep in mind that it is a holiday weekend here. Like the daily charts and stuff that I put out, and I think I've talked to you guys about this before at length. Where's the tweet? That's probably where I should go. I think in simplest terms, we had a doji there this past week. Somebody clearly had an agenda. They needed Bitcoin parked at a very specific level here. I really did. I think that's exactly what happened here. The max pain on these options was 30,000, and that's basically exactly where they took this thing out. And, if you're not familiar with max pain, like I said, maybe consider joining us. We talk about options expiry data and, where the derivatives markets need to go out for the market makers to make as much money as possible all the time. We have our funny little meme on the site. Of course, Jerry Powell's number one job is to make sure as many options expire worthless as possible. That's what his job is. At the same time, too, nothing has changed on this chart. The trend is still up, and last week's price action did go and take price to a new high here. Usually what happens is this is the sell in May and walk away. And then usually what ends up happening here is through the first week or so of July, and actually more specifically, once we transition out of Fed talk and we transition into actual reporting of Q2 earnings, and we start talking about the actual money that companies are making in the market, and we're not really so worried about interest rates and all that kind of stuff. Usually you see the market actually goes into sort of that summer sort of framework, and things like crypto and venture cap, they often usually have a pretty good time through the summer, right? That's we're in mom's basement. The kids are out of high school, and they're sitting on their computers and they're just watching all the social media influencers and whatever is a hot name. They're just in there buying, and it's all pure momentum. So me personally, I went on, took a week off right here because the whole market was pointing down, and we've going through the sell in May and walk away scenario. And I was like, well, there's not really a big hurry here. Didn't take into account the fact that there was such a massive options expiry event that happened basically Friday the 30th, 2 days ago. I thought that we would come through the holiday weekend and then put in our bottom here, maybe somewhere through the first or second week of July, and then start working our way up. That's usually how this game goes. But of course, as soon as you get used to something, they go and change everything up. Not a big surprise. The one good thing about this is because I trade setups, I have very specific rules in my trade. Yes, we did have shorts that were working here, but 50% of the anticipated move was hit. And at that point, we have the rule is move your stop to scratch on 50%. You don't want to see a winning trade turn into a losing trade. So the worst case out of this short was we were just stopped at scratch. And that's just the way it goes. But we are now fast approaching the end of this seasonal correction window. So thinking down now, I don't think that's such a good idea. And if anything, but judging by, trend lines and all that kind of fun stuff, if we actually start painting any kind of W's now over here, oh boy, that's going to set us up for a pop up top. Keep in mind this inverted head and shoulders, this is the price objective, that arrow there projected over here. It says, and this has been operating since now basically the middle of March. And it says that we really should go up to this like 35, 36,000 area. Also notice too, 38.2 of the entire trading range. This is off of the high, the all-time high. And remember, the rule is at any given point in time, you should expect 38.2s to be tested. So notice that also is that inverted head and shoulders level. And then, the whole parking garage, that's the whole point of these arrows, 200%. That is that head and shoulders objective. So also there's a 877 and a 2.618 foggy boggies floating out there. So this is kind of one of these situations. To me, this looks like show me a new high and I'll show you a buy. Climbing the wall of worry. What else? Heading, through the seasonal correction window, now getting ready for that summer silly market. Show me W's on other sides of trend lines, and I'll show you bullish setups. The only issue here, though, is that just this inside bar here alone is not enough to get me to actually pull the trigger. What I really need to see is I need to see those W's on other sides of trend lines to actually go, holy Jesus, this is a buy. We got to get going here on the long side. Quite often what I do see is when markets do break these downtrend lines, we actually have to walk our way down the trend line from the other side. It happens a lot. So that's the whole point of we want to let the trend line be broken. Then we want to see bullish market structure develop on the other side of the trend line. And what this would set up is an AB equals at the, wherever the bottom comes in, CD, which is probably also going to take us up into this 35, 36,000 area. And you might even argue, look where 50% off of the entire range is. It's all the way up there. Excuse me, at $44,000, or actually $42,000. And just so you understand, is this really out of the ordinary? Remember the last correction window that we went through? I was showing you this earlier, right? I think that we were doing this, but keep in mind this one, this 16 through 20 correction cycle, the end of the dead cat bounce here actually was all the way up to 61.8 of that previous move. 61.8, folks. 61.8, 61.8, 61.8. Right? Let's see where we can show that to you. All right, there's our weekly chart. So the previous cycle, which set up that Gartley I was telling you about, this is basically the same part of the cycle that I think we're in right now. So notice, hey, there's June, right? So this rally peak was back to 61.8. So I'm not saying that this is going to happen. I haven't got a clue. And like I said, I don't really like the idea of getting into the business of predicting this is what's going to happen. You just trade, go with the chalk marks, and just understand a push up top here. Now we've got all of the moving averages on the weekly chart below us. They're all pointing bullishly too. The final coup de grace to all this is if the 30 SMA can get back above this 200 SMA. Oh boy. I mean, everything's pointing up here. We have higher highs in price. So if anything, what I would say is we just went through a very normal seasonal correction. This is so cliche, it's ridiculous. Now, if anything, the fact that the market jumped up so violently and so strongly, I have a feeling this is more based on Caitlin's sort of uncovering of the fact that she's going to get her Bitcoin bank and she's going to set it up in the state of Wyoming. And the individual states, they're all starting to sort of pile on and go, you know what? Screw these feds. Look at what they just did to these regional banks out there in California. You could make the argument that was a coordinated fuck you to all of those regional banks. And of course, some of them went just belly up. And, there were other banks that just mysteriously out of nowhere, poof, you're no longer a bank. We've decided to nationalize you, right? That Signature Bank. Sure, there's a lot of state people that are like, we got to somehow put this genie back in the bottle here. This is getting out of control. So in a weird sort of way, I mean, I get the feel, and remember, a lot of this is politics. The SEC has recently said, and that sort of takes me to the next sort of conversation here, that was the weekly chart. As I said, we've rallied smartly right back up and actually broke to new highs. So if anything, I think that we're getting near the end of this seasonal correction window. And get ready. I mean, we could very easily over the next month or two easily push up into these 38.2s and 50%. Very easily. Wouldn't surprise me one bit. If we go to maybe sort of the medium term frame basis, this is the daily price chart now. I still think that we're actually fighting along this megaphone. And I could very easily see, in very typical Bitcoin fashion, rally into FOMC, rally into FOMC, rally into FOMC. Interesting here, we actually dumped into FOMC. That was a bit suspicious. And then notice, right after, they even tried to push it down a little bit more. And then mysteriously, this BlackRock news came out of nowhere and the market just jumped up higher. But doesn't this kind of look to me like, doesn't this look to you maybe like a bull flag, A to B, consolidation, C to D, to take us right back up into that damn megaphone level? It's almost like this megaphone has got like a magnet attached to it. And it's just like, wow, wow, wow. And I get the feeling the market wants to head up top here. The issue that I have here right at the present, though, is this is absolutely a horrible trade setup for a guy like me. Terrible. Brian, I mean, ideally, remember there's that trend line I talked about. We broke through it, and I need to see some sort of bullish market structure on the other side of this. And considering that this whole move was manufactured out of the BlackRock ETF, and then all of a sudden you heard on Friday, and it's what caused the lower time frame charts to start breaking down, is the regulators, SEC, all that nonsense said, Well, basically because of the wash trading that we still see going on over on Binance, and because of the very suspect nature of things like Tether, and sort of the shenanigans around Mr. Binance's involvement with the Tether stablecoin, we can't endorse a spot ETF. Fascinating, of course, there are other ETFs that are floated in other countries. There are ETFs for Bitcoin in my country. Is the Canadian regulatory system any different than the US? Not really. Also, too, down in the States, there are Bitcoin ETFs that trade off of the futures. So it's fascinating how this is more sort of what I think just political theater. I really think that. And as I said, this rally here, it was off of V bottom. I mean, that was basically a new low. And it just spiked straight up here on this old Bitcoin ETF, BlackRock. Oh, could BlackRock be maybe in bed with some of these regulator, aka puppets of politicians? Could that ever happen in this world? You have to be kidding me. So, I mean, is this whole damn thing corrupt? I think it stinks like yesterday's garbage, as the old saying goes. So, the problem that I have right now is because this is a bull flag, if we resolve to the upside here, I could very easily see us jump up. There's that 38.2 off of the all-time high, sitting up there around 35, 36,000 bucks. And oh, lo and behold, there's that megaphone line. No. And if you go A, B, C, D, oh, what a coincidence. That'll take us right up top there. And we'll see that in the 4-hour chart in a minute. But at the same time, too, we actually do, even currently, on that SEC rejection, we do have an M top working here on the lower time frames. And, I'll call a spade a spade. There is no W on the other side of this trend line. So if we get any kind of sell pressure here, and when you look at the lower time frame, that 4-hour chart, you can even see the POX down here. So we're kind of up in no man's land right now here. This is really dangerous territory. If I was going to be buying this, I need to see, 3 higher lows, bought setups, that kind of stuff to justify getting in on the long side here. But I'll tell you, my knee-jerk reaction, and this is where we sort of come back to the lower time frames, is I'd actually make the argument that on that SEC rejection news, that's what this big red candle is, the market went and actually M'd out. And if you really drill in on, like, say, a 10-minute chart, there was like a reload zone within a reload zone within a reload zone. I mean, this was just the most incredible level possible. And then mysteriously, all of a sudden, this negative news comes out at the absolute perfect trade level, and the market just puked right out. So I would say on balance, if this was Monday to Friday kind of idea, I would be thinking lower. The issue here, though, is like I said, we just came into a massive options expiry event. So was this market artificially propped up to make sure that those options expired worthless? Which I think is an absolute yes. And then to add insult to injury, now we go into a holiday environment. Really, holidays are the absolute worst time to quote unquote trade because everything goes thin. I mean, you can imagine most Americans. Chris was even telling me, Brian, I don't want to get together and chat with you. I'm having barbecue this weekend and I've got a massive meat buzz going on and I'm just chilling out with half a pound of ribs in my gut. Chicken. It's like, and actually, if you ever see Chris, he's he's a total bone rack. So there's no way he'd eat a whole bunch of greasy, fat laden ribs. Just kidding. Anyway, so anecdotally, Chris was even telling me he was, having barbecue and stuff. Not really interested in the market yesterday. I don't know about today. Keep in mind, actually, the Americans, you're not supposed to get your meat buzz on until like Tuesday or something, right? Yeah, so Tuesday's the official holiday for the Americans. Yesterday was the official holiday for us Canadians and a good portion of the world. I guess maybe even just like a Caucasian world. I don't know. I don't even know if there are. I think is there a holiday in Europe on July 1st? That's a good question. I don't know. Um, but here in North America, it's pretty popular, sort of weekend government holidays, that kind of stuff. And this is going to be really screwy trading all through this window here. So as you can see on this 4-hour chart, notice higher highs and lower lows. And one, two, we probably should have a tag of that level up there. And then 1, 2, 3. Oh, well, we have had a tag of these lows. So actually the next logical tag is up top here, which of course, if you did short that M top on that, US market news, you might just get flushed out here as they work the market up and tag that megaphone top. If this was a regular 9 to 5 liquid trading, not really that big, I really wouldn't have a problem being short off of this M top. But because we are going in this crazy ass holiday weekend environment, can the market makers flush out highs and lows just to run stops? And then, when we actually start back in earnest, maybe like the 5th or even maybe the 6th, keep in mind also too, that was the end of the quarter. So Bitcoin price being bid up there, was that maybe partially due to position squaring and window dressing into the quarter end? And then we've had lots of talks on the site recently that it looks like the economic cycle, we're moving further along the cycle, and maybe discretionary and tech and communication services will be out of favor in the third quarter, and we'll move more towards things like industrial names and commodities, materials and stuff. Keep in mind, August usually is when gold has puts in its bottom. So all of those sort of tea leaves and stuff are all pointing to maybe tech was bid up here into the quarter end just due to position squaring. I don't know. It's going to be an interesting couple. Every new quarter, we always have the first 2 week study. And I think this first 2 weeks of this quarter are going to be very, very interesting tell. And if I'm not mistaken, I think actually the Fed meets following actually, I don't know. I think I have the date on here on one of these charts. But the Fed's, in fact, actually, I even put it like FUMC. Yeah, here we are. Next Fed meeting is on the 26th. Interesting how they could rally the market up into that event. Why? Because keep in mind, all the put options are supposed to expire as worthless as possible. And we have the big July options expiry the 21st of the month. So could they maybe F around with the market? Actually, maybe even have it a bit, well, they probably want to have it as strong as possible so that all the put options all expire worthless. Then the Fed comes out on the 25th, 26th and says, yep, we need to raise rates, and boo, the whole damn market rolls back over. So anyway, first 2 weeks of the quarter should be very interesting. So off of the daily charts, and this is again, half of my job as a professional trader is just to sort of identify levels, and then if I start getting a bunch of confluence, and it's sort of like, okay, as we get up, let's say into this level, we start seeing bearish momentum divergence, we start seeing M's in price, well, then you've got a trade setup. But like in a situation like this, what I'm basically said here is I don't know which way the market's going to go. We're kind of like at the midpoint of two extremes. We could very easily go up top. We could very easily break down into Collins pump chaser zone and trade back against that trend line like I was speaking about earlier, and which would be very normal and very typical. We could pull back here, and if we do put in some sort of nice W, then rock and roll. But until I see the W's, I can't think up. So as I said, off of the shorter time frames, now looking at the 4 hours, and I don't really like going anything lower than 4 hours for you guys on YouTube because in a half an hour, this will all change anyway. But if this does put in 3 higher lows, then there is our bull flag objective. But as it stands right at present, we do actually have a well-defined double top working. So I think the trade is to actually be short off of these candle body close levels with your stop against the highs. But given the fact that this is a holiday weekend, I would not be shocked whatsoever if they run these weekend stops out like over, say, today or tomorrow. Wouldn't surprise me one bit. So do I have a lot of confidence in this short? No, I don't. Having said that, I do like the idea. This profile looks very, very suspicious. Lots of people are up here, but I could very easily see them pop it up just top here and then slam it back down against this uptrend line, 200 period moving average, and fill in this huge, like this profile looks very, very empty. Remember, profiles want to be full, so this wants to look like a parabola. Clearly, the market is saying to me right here, hey, I've got unfinished business here. So we'll see what happens. Only time will tell. All right, so hopefully that gives you an idea about Bitcoin. I think more importantly, I mean, like Bitcoin's going to do what it does. Would I, as I had said with regard to this daily chart, if you believe in the M's and W's and you believe in trade location and you believe in bullish divergence as indication that markets should be bought or sold as sort of like a tell, then this W here is where you should be long, and that's like 17, 18 grand. So coming in and justifying and investing in Bitcoin here at 32, 33, $34,000, no, I can't do it. You want to trade this off the lower time frames? Okay, that's perfectly fine. You better have trading plans. You better obey your trading plans. You better have clearly identified entries. You better have clearly identified profit objectives, clearly identified risk thresholds. And if you break that risk threshold, you better get the hell out. I can't speak to that in these kind of videos because, those are trades. And that's what our trading community is all about. That's what our school's all about. Teach you how to run effectively your small business of trading. What I will say here is that there might be a half decent trade setup, either going one way or the other. If you fancy yourself a trader, like I said, I would actually argue that off the lower time frames, I'm getting conflicting messages. And I don't really want to talk to you guys too much about this on these kind of videos, but just FYI, and of course, you can see it in the newsletter. Where's the newsletter? Newsletter, where are you? You're around here somewhere. Okay, so they're starting to build. All right, what time is it? It's noon now. Okay, I got about an hour, eh? So you can see, and we can do this very tertiarily. The algo is pointing up right now. So it flashed a sell. Then it took that back, and it's now back on the buy side. And this is the way algorithms go, folks. So what I'm a little worried about with people is they're going to like join the site, and they're going to be like, okay, I'm just going to take the algo signals and I'm going to get rich. These algos, I mean, if you can trade like an algo, great, but they could be buying, selling, buying, selling, buying, selling. You cannot have an opinion, and you better be damn good at entering orders and be very, very consistent. And I could even tell you, since last December, I've been trying to run the algo just manually, and it's difficult. In fact, the interesting thing is we had a buy signal there, and I went on vacation. Imagine that. I actually wanted to go on vacation, and I had to say that, because I'm going on vacation and I don't know if this damn thing's going to break down or not. I've got to square up the position. I can't take the chance. And it turns out the goddamn price jumped like, 10, 15% while I was on vacation. Anyway, you can see there is the latest buy signal came in. And I wasn't awake because that's one thing with algos is, when the signal comes in, you better act. And I had to actually just place an open order at the level. And if the algo turned bearish, there was the algo signal. It happened a while ago. And I figured that I missed it, but I placed the order because I'm doing nothing more than just trying to take every single goddamn algo signal. So algo actually just on the pullback that we saw this morning, I got filled on that algo signal. We might find that the algo actually rolls over tonight. And if it does roll over and go negative, well, then I've got to close the position out. But as you can see here right now, algo is pointing up. I should be long. I am long from the appropriate level based on the algo trade. But as I had said earlier, based on my manual trading, that was a double top breakdown on the SEC news event there. So I've got manual trades are working shorts, algos are long. If anything, I don't really like that because that basically means I've got one arrow pointing one direction, another arrow pointing another. And I found, me personally, that this works best when everybody's pointed in the same direction. Now, given my comments about things like megaphones and how this is a holiday thin trading event, it wouldn't surprise me if they go and run this double top out here. And the algo is right after all. Wouldn't surprise me one bit. But just FYI, and actually I think that's exactly what this is and this is about the only time that I really want to talk about this publicly, but there is the algo signal that came in most recently. And now you can see I had the open order filled, and now the algo is actually in the money. Go figure. Anyway, I'm not going to talk too much about algo right now. I just wanted to just comment on that. And of course, full disclosure, I'm an open book. There's no bullshit with me. If I make money, great. If I lose money, shitty. It's just the way it goes. Hopefully, I'm a demonstrator of best practices. Hopefully, what I am is the demonstrator of best behavior. Trade your setups, take appropriate risk, do what you say you're going to do. And if you've vetted your setups and you're trading 2-to-1 risk reward, the profit and the money should take care of itself. So anyway, we'll see what happens. And I do find it interesting that basically the plan, one more comment about algo trading, the plan was to basically take every single signal and just, live by the sword, die by the sword. And the algo now is up about 58% since December. So can't complain. It's pretty good profit numbers. So, I mean, it must be doing something right. So anyway, that's my rant about Bitcoin. Hopefully you guys have a pretty good idea what I'm thinking right now. All right. So headline here was Fedsters started the week with we're going to raise rates. We're going to raise rates. We're going to raise rates. We want to inflict pain on you. We got to bring this inflation rate down. Then the data came out on Friday. The runaway inflation problem is not the problem now. The problem here now, it to me appears that it looks like the consumer is breaking. And if the consumer is feeling stress in the United States of America, just imagine what the consumer is feeling like in the Soviet Socialist Republic of Canada. I mean, you go on YouTube now and it's remarkable. I have to show you. It is absolutely remarkable. All of the, there's just a ton of them. All of the videos about how it's basically the end of the world for Canada. And I have to say, I agree with them. You've heard me, Brian, in the past, always go on and on and on. Brian's usually right, but Brian's usually early. Well, Brian's usually right, no doubt about that. I have a pretty good track record, but I am usually pretty early. And what I've just noticed is I'm seeing a lot of this kind of talk right now. So, look at all this. I mean, they're now beating up on fucking Castro and how horrible society is here in Canada. Look at it. It's everywhere. Bank of Canada will over-tighten mortgage renewal cliff. So it's finally starting to happen. Here's another one. Canadian banks just ordered to prepare for worst and stuff. And of course, we all know the TD Bank is the most heavily shorted bank stock in the world. I mean, it just goes on and on and on. I mean, it's remarkable to watch these guys. So I think that the US market is going to be soft. And the data that I'm seeing is that, yeah, US, it's going to be a bit of a slog, but it ain't nothing comparison to how this can. I mean, this stupid. Tune into the regular rants from Brian, and you'll know lots about my impressions of the horrible situation of the economics of Canada. It's just terrible, terrible, terrible. So I don't actually think the United States is where it's bad. Where I think it's bad is any of the countries that are the commodity nations of the world. And of course, that's Canada. I think that there was a lot of window dressing going on this past week. So, into the end of the week, of course, you saw the stock market get bid up. You saw a lot of the FANG stocks, that kind of stuff, get bid up. But we are starting to see some anecdotal evidence that maybe the market's rotating into the next sector, which should do well in the first 2 weeks study. And that should be things like the industrials and the commodities. And as I said there earlier, August, usually gold does pretty well. So I might be watching for some sort of bottom here in gold if you're a gold bug. Specifically with regard to crypto, the USDC formally rejected the most recent application of spot ETF, various concerns relating to wash trading, unregulated stablecoin associated with overseas operators. Remember, I talked to you earlier. The SEC really does not like the way Binance operates. If you want an insider's look at that, just go watch Crypto Chico's videos talking about Binance and the suspect nature of Tether and all that kind of stuff. Is that a real reason for them to reject this, or is that just it's a convenient excuse? I don't know. I think a lot of the price action that you saw in Bitcoin had everything to do with that massive options expiry on Friday. So coming out of the holiday weekend, we should, if everything's normal, we should see a transition into our summer trading market state. Now, things with regard to Bitcoin and the options expiry, it popped actually about a week or two early. So could it maybe take a bit of a pause here? I don't know. But I am seeing a lot of sort of, hey, this is the kind of market that I want to buy. And I think this KMD is a really good example of this. So, if we just pull up the KMD chart, these are the kind of, this is, like if I was going to say, dear Santa, please give me this, this, and this, so I can go make a bunch of money speculating in the market. This is exactly what I want to see. I mean, first and foremost, is that asset at the top end of the range or the bottom end of the range? I think that's pretty straightforward. Second off, do we have indicator confirmation that, price actually doesn't look so bad here? Hopefully you can see here, we've got lower lows in price, but higher lows in momentum. Yeah, what the heck's going on here? I thought this crypto stuff was all a scam. If I listen to those ECB people, oh my goodness, crypto is like cancer. Fuck you stupid goddamn bureaucrats, don't know anything. If anything, we all need to join the Caitlin Long fan club. If my future doesn't pan out at here at TRI, I think I'm gonna literally drive down to her house, knock on her door, and say, "Look, I don't care. I'll work for 1 penny an hour. I just want to work for you. I'll work in the mailroom if I have to. You're awesome." I don't know, Caitlin, if you're listening to this and you need someone working in your mailroom, hey, I want to apply. Anyway, point of the matter here is we're getting a lot of anecdotal evidence that, hey, this market's actually pretty damn strong. Not weak. Strong like bull, right? This is exactly what I want to see if I'm going to invest my hard-earned money. And this one was a good example because all the TRIers, it's great that they learned this shit from me, because now if they can just remember this every 4 years of their lives, you get an absolute gift of the market. You can do nothing for like 2 or 3 years of your life, and then just head on back, once every 4 years, look for charts that look like this. And this is a no-brainer. This is so easy. It's ridiculous. And it's just staring you right in the face. Is anybody talking about this in the public? Nobody. And yet this is everything that we teach. Trade location, indicator confirmation, price structure, go. It's not rocket science, but the irony of it all is that, do you hear anybody in the public telling you, hey, you should be paying attention to something like KMD? Look at what's going on here. Nobody does this, do they? Isn't it kind of tragic? Kind of bums you out, really. So anyway, it's just sitting there. And does it make sense, given all my rants about seasonality? I mean, can you see the sell in May and walk away? Oh, Jesus H. Christ. And then once we get through that July 4th holiday weekend, it's time to turn the silliness back on. I mean, Jesus, this is like, you can't write better fiction than reality. This is perfect. And it's just sitting right there, staring you in the face. I don't know. Am I an idiot? I don't know. Female room would be more attractive. What are you saying? Well, too late. Oh yeah. Well, I know. I mean, the point here is, Eddie. We had a fun little group meeting. We've got our little old lady canasta club, and Eddie here. Eddie's going to be richer than all of us put together by the end of this. I hope you realize that, Eddie. Yeah, if anything, maybe I ought to keep you in mind to see if I can get a job with you. Your days of slinging cement are they're numbered, my friend. Your I don't know, what's the term I'm thinking of. I wouldn't fall in and maybe you'll make so much money that you could actually buy the Tanzanian property right out of from under them. Wouldn't that be funny? Well, Eddie, we're gonna have to let you go. We've insolvent. Oh, I tell you what. Why don't I just buy the plant and then I'll keep my job? Anyway, you can see the future. The future's coming. I mean, and the thing is you can go through. There's about a half a dozen names that I was going through these charts, and you can see this. This is everything that we teach at TRI. It's just sitting right there. Obviously no guarantees from the management. But anyway, if I was going to put in a chart of the week, markets of note, trade of the day, all right, there it is right there. And you can even see here it was before it broke out. So obviously the goddamn thing popped hard here. So anyway, we probably caused the breakout. Anyway, so you know what I would say this is? This is one of these things. There is no wrong way to read that line. But I can absolutely tell you, anybody that's in the public that sees this, and they're going to see this down move, and they're going to be like, why on earth would you be interested in that? So they would read this as opportunity is nowhere. And there's nothing wrong with that. But I've played this game so damn long that when I see, big fat fibs, right? Brian's favorite fib, when I see bull div, when I see volume spiking, when I see Willie stupid, when I see W's in price action, when I see the market crossing above moving averages, hell, I mean, geez, this is probably just a W on other sides of trend lines, because look how steep that is. That's ridiculous. Even that right there, right? I mean, This is everything that we teach you. And so I would read this as opportunity is now here. But I can't tell you, I can't force you to interpret that one way or the other. That's entirely up to you. So I wouldn't chase here now. You've missed the buy, right? The W is down here. So don't go and chase this thing and bid it up. But if you want to work stink bids against these lows, against that double bottom level there, there's nothing wrong with that. And that's just one example. Anyway, so that's our newsletter offering this week. I hope you guys enjoy that. And if anything, like I said, you can get this in your email. Just head on over to this newsletter sign up. Also, too, I think what we'll probably do is if you do sign up for the newsletter, you'll be like automatically enrolled in the monthly or the quarterly raffle for the school term as well. So that might be a fun way for you to participate in the raffle as well. But anyway, point of the matter here is that's our idea, at least not our, Brian's idea that you might want to chew on for the week. That looks pretty damn attractive. Okay, so there's your newsletter. Hope you enjoyed that. Hopefully that gave you a pretty good idea of what I'm seeing in the marketplace. Nice newsletter. Good job, Chris. Nicely done. All right. Chris did say there was a couple questions in the AMA document here. So I've got about a half an hour or so left, and then we got to hit the road. As you can see, got all pretty. Got the sort of greaser hairdo going today. Lots of hairspray. You know what I noticed? Geez, look at my chin, eh? So my hairdresser used to always joke, "Oh, you're so young, no gray hair." But it all seems to be coming in on my chin now. So anyway, if anything, maybe now people won't accuse me of being only 20 years old and doing this. Okay, looks like we got a couple questions. Not really a lot, but I'll see if I can answer these. So. Also over to on YouTube, I suppose you could type in a question there if you have one. Looks like a couple people are asking me to look at names. If I have time before 1 o'clock, we can scroll through there quickly and see if we can just look at your ideas. So number one, hi Brian. Many analysts are calling for $120 Litecoin going into its halving. Usually the price tops out about a month or so ahead of it, so I don't know about that. That price wouldn't be quite a double for me, but it's pretty close, within 20 bucks. Historically, Litecoin dumps into its halving. Yeah, usually. You know, and if anything, if you're hearing people in the public talking this way, what does that mean about them? Are they long Litecoin or are they short Litecoin? And it's $111 now. So we're probably getting pretty damn close to that level. Usually, and who can quickly come up with the Litecoin halving date? Because if I'm not mistaken, I think it's around the 3rd or 4th of August. Where should we do this? Let's go over here. There are way too many charts open here. It's funny how the algo is killing it right now. This algo, it's gonna drive me crazy. Oh, Jesus H Christ. So we hit a high here of 113 and change, 113.77. Oh boy. So you can't say it's cheap, that's for sure. I guess we'll go over here and then go here and go here. I know we used to do those weekly crypto shows with Ben and Nick and Derek and then Paul. And I remember Ben, he did a lot of research on Litecoin. Do we have a halving date, guys, for Litecoin? August 2nd. All right, so that would basically be in there, right? Somewhere in that area. Uh, who can just do a quick Google search of the last two happening events for Litecoin? Because I might as well just show you right here in front of us. Where's Polo's Litecoin's been around for a while, hasn't it? Yeah, there you go. So I remember specifically oh, not interesting. Yeah, maybe it was after that. Maybe on Stamp. There is Bitstamp. It's always Trex. I don't know whether we even want to look at Trex anymore. Where is Stamp? Stampy. Stampy. I don't see it here. Is there a way I can actually do by exchange? Let me do this. August 2015, link in lounge. Oh, you're awesome. Lounge. There you go. Thank you, Joshua. Okay, where's the history of them? Yeah, actually, this is a pretty good example. So I remember specifically, was this? That should be $9. Yeah, so you can see there's 850. So right up here, this was $9. And I remember there was a guy in China who was running a Ponzi scheme, and he bid the price up. And was this a weekly price chart? Yeah, weekly price chart. So you can see there's the halving event. So 1, 2, 3, 4, 5, 6 weeks ahead of the halving event. So, be forewarned, everybody. Where's the next one? So this one. So I don't think there was a Ponzi here. 2019. Jesus, I can't believe 4 years has just gone by that quickly, Anyway, so weekly chart 1, 2, 3, 4, 5, 6, 7 weeks ahead of the halving event. So I hope you guys are seeing a bit of a theme here. Okay. So that's usually what happens. And what usually happens here is it's a buy the rumor. Like everybody keeps buying, and you simply run out of buyers. And everybody's just too long on the buy side. So there's a weekly price chart. And if I understand you correctly, you guys are saying that August 3rd? Well, what do you got there? August 2nd. JB says August 2nd. So where is August 2nd? All right, so we'll say the 7th, right? Somewhere in there. So could this be some sort of top in here and then we come back down here into that event? It would make perfect sense to me. I mean, we're a million miles away from the high. So, what I mean, I'm not quite sure what it is I can tell you guys other than we are making higher highs and higher lows, so that's fun. Chaos Theory 2.618, that's up $134. So if we believe in chaos theory, then the market is painting that kind of objective. I'd also say too that usually markets like to retrace 38.2 of their most recent move. It might be interesting just to see what this move is. This looks 50%, but if we think like Collins dump chaser zone, Oh, okay. So there's 38.2. Then it rallied all the way up into here. That's probably like 61.8 or something. Yeah. So did 38.2, then up to 61.8, then crapped out. So I don't know whether we use that whole range, but we could go just even here to start off with. 2.618, 38.2. That seems logical. So like a stab up into this. I like, hell, we often say, where are these guys sleeping right now? And they're waking up a little bit because they're getting a memo. Hey, pay attention. But these guys have been sleeping for quite a while. Those guys there. And more importantly, these guys here. Where are they sleeping? They're finally like, well, actually, my wife divorced me 2 years ago, Brian. So I'm no longer sleeping in the doghouse because I'm no longer at home. Oh, boo. It's just boo. But if they did survive, those guys are just begging for release. And probably also these guys here up too. And the thing is, right, is price will go sort of up into this level, release these guys, then come all the way back down to this level, then go up into this level and release those guys, then come all the way back down to this level, then go all the way back up and release these guys, then come all the way back down to this level. I can see it coming. It's the way this shit goes. So that's what probably our future is going to look like here. If I like move this over to today, it's going to be up into this level, then back all the way off, then up into this level, then back all the way off, then up into this level, then back off, then up into this level, then back off. And of course, if we am out, then we start the whole damn thing all over again. So, believe it or not, my price objective on this thing, I think I would just keep it as simple as possible. And I would say that window right there. So the chaos level, 2.618 off the original double bottom, which I think is perfectly legit. That is $134.42. This is Litecoin versus US dollar on Poloniex. Obviously, if you're looking at maybe Tether or something like that, it might look completely different. 141.23 is 38.2. And then just some sort of crazy ass horrendous spike. But I don't think that there's just too much resistance in here. We could work our way all the way up to this 172. But my hunch is we probably stall out around that 140. That's my 2 cents for whatever the hell that's worth. We could probably also do like 2.618 off of this range. And there's also another anecdotal evidence sort of talk that we get up into 155 here. Again, all the way up into these wicks. Makes perfect sense to me. These guys all want release. So once we do release them, you probably see that the market actually starts working its way back down, right? If we get this 2.618 and we reverse, then what we should do is actually come back and test the original bottom, which looks something like that. So we go like that. Yeah. So 38.2, if we top out somewhere up in that area, there's going to be a pullback into here. But it looks to me, actually, if we go off of the entire range, that's perfect, right? Because what this means is this is some sort of shoulder, head, shoulder, neckline. And David O would like that as a neckline because he likes his necklines nice and level, right? Nice and straight. And 38.2s, that would make perfect sense. So we get some sort of pullback here following that halvening event, maybe even, through it. The 6 months prior to BTC halvening would be October. So maybe this thing does something like boop and then boop and then boop, 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 like that. And then we start bottoming and getting ready for that next bull market. And the bottom comes in somewhere around, September, October, November. So is squiggly line theory for the win? Obviously, nobody's got a crystal ball, but if I was going to crystal ball this, that's what I would be thinking right now. So I don't know whether that helps you or not, Stephen, but there you go. Merry Christmas. We don't need that to be numbered, and we can move that over. There you go. All right. All right, David says here, oh, and did I finish this? Litecoin, if you would be considered take some profit at 120, even if it's not quite a double, given the fact that historically today's are some. Well, actually, I think LTC dumps ahead of its halving event. I might argue that considering it's about a month ahead of that event, that we are in the blow off top phase of this. So, you want to figure out where the top comes in. Really, I might argue this is everything that we teach you guys. We want to think trade location, indicator confirmation, price structure, go. So I still think that trade location, based on the fact that this huge Foggenbaum is pointing up into this 2.618, this Foggenbaum off of this W is pointing up into this 2.618, 38.2s are up into here. I think your trade location is up in this area. Really, that simple. I would say that this thing is probably done when it does some sort of blow off top. And in a weird sort of way, kind of like what we were saying with Bitcoin, I wouldn't be surprised if you go something like A to B and then clone C to D. And then we're going to apply the Alt ABCD targets, our trade setup window, something along those lines. Boom, 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 boom. We change this to our bot setup. All right, so there's 33. That's pretty close. Maybe we go off of that low, so then we know it is there. Let's go like that, then like that, and like that, then like boom. All right. So, if you see a nice little W, you want to take this 25 level just because you love bots so much and you swear by them. That's fine. I mean, it's up to you. It's certainly not my trade. But, maybe you bought this market structure bottom down here off of like, say, a 30-minute chart. I don't know. All right. So one low, two lows, three lows, fighting with that. You want to front run this thing. Great. I bought maybe that breakout there. I got 1, 2, 3, 4, 5 lows to work with. And I'm long from here. And I really like to see the market move up to here so I can move my stop to scratch kind of idea. And I'm just going to ride the wave higher. That's fine. Nothing wrong with that. There is the bot objective, 131.47. 127's up at 139 even. Remember, we said this was our head and shoulders objective, right? If we go up to say that 4 hour, there it is there, 1.272. That seems perfectly legit. Nothing wrong with that. Blow off top into that Foggenbaum level would make perfect sense. So very clearly, no doubt about it, we're coming into the end of this move, not the beginning. So, I was barking and sending social media tweets and all that kind of crap back actually right around the new year. So right in through this window here. I mean, it's a bit expensive to go long at 80. And of course, this all depends on where the hell you trade this. If we probably pull up the tether instrument, it's probably a little bit cleaner. Yeah, so there it is. So there's your, wide double bottom. Hell, you could have gone off of that double bottom. Point here is that's in sort of the mid 60s. So a rally up into that 120, that's your double level. I wouldn't tinker with that really. If anything, we often say, right, look left. So we just cleared through that high right there. And actually you can see we're fighting like the Dickens right here. So look left. If we can clear through here, the next major resistance point is that high right there. And that's what, 132, 134, 134.10. So I like that level. So if you are long off the double bottom level, right, that double bottom level there is 63, 63, 64, 47. So that's 128, 129. There's 64, 69. So that's 128, 129, 40 in that area. I think you just work your order at that 129.75 kind of idea and just be patient. There's no sell signal here whatsoever. We just made another new high here. So this is this, you know what this is? You know what this is? That's what this is. This is that. That's what this is. This is, and then we're climbing the wall of worry here. And everybody and their brother is going to be like, this is the top. This is the top. You got to sell now. You got to sell now. Right. And it's going to do one of these things and go consolidate for, a month or so and then get ready another, and I used to have an old client of mine who used to always say, this is like a racehorse that it like has a huge spurt and then it has to back up and sort of, go a bit slower, then get all its energy and have another race to higher here. So I wouldn't be in a big hurry to get out of this thing just yet. Number one, we just saw a new high. So if anything, you just got to be patient. You kind of hope that you'd see a nice M top here to frame an exit. But I think in this kind of a situation, I think you just work your order there up at 129, 130 area and just let the market work its way up into this trend line resistance. And if you're lucky, you just get a nice fill at like 2, 3 in the morning. You're half asleep. You don't even know it's happening. And you get that. Should this thing, the problem here with trying to call tops is, you might call this and then it starts to break and you go, oh man, I'm so smart. Look at me. And then the damn thing just turns and rips higher. So I'm not going to say that that's a sell. And I certainly wouldn't short something like that. What I would say here, actually, this is a pretty good tell. So is the volume topped out yet? No, we just got a huge spike higher in volume. Is MACD momentum topped out here yet? No, that hasn't topped out. Is Willie even stupidly overbought yet? No. So when all this stuff all goes into divergence and it starts emming out, that's probably when you should be like, okay, do I really need to be a hero? But right now, based on what I see here, I don't see any top. So anyway, that's my 2 cents. Hope you enjoyed that. Okay, back to the number 2 question. What time is it? I got 15 minutes. That's not bad. All right. Hi, Brian. Do you think that once institutional investors start heavily investing in and controlling more of the crypto space, that the 4-year cycles will eventually end and the returns in crypto will start looking more like what you would expect out of the traditional stock market? Yes and no. It'll be interesting to see whether POW survives. I can understand that Bitcoin can keep rising at the pace that it has, and that's sort of this talk. If it continues to be that store of value, and every 4 years the halvening event payout gets reduced in half, and the miners continuously compete for the payout of Bitcoins. As long as that model and any other proof of work model that's been time tested, things like Litecoin, as long as that model remains, then I don't see any change to this business model. The issue here, of course, is what is the cost of production? That is where value will be. And I don't mean to be rude, but even now at $30,000, we are not at cost of production. One of my favorite charts, but of course, TradingView probably fucked it up. But of course, I always make reference to you guys about the cost of production of a Bitcoin. And not really anything rocket sciencey, just one of our buddies, Shane, who was supposed to be buying a bunch of Ubic. I sure hope he did. Anyway, I put this study together years ago, and these are some of the various miners. And he even pointed out recently that even the most recent miner that's come out doesn't have a huge difference in price relative to this X19. And I suppose we can move all this stuff over. And I might argue that the X19 right now, or S19 XP, its cost of production is around 12,000. I have seen that people that are actually active in this space, running huge mining operations, actually have a cash cost to actually mine the Bitcoins even lower than that, in like the single digit thousands. And you can always go look on my Twitter feed for all those kind of references. I think anybody who's running S19s right now, they've basically been put out of business. S17, beg your pardon. S19 still somewhat profitable now. You can see they marginally were underwater there a while ago. S19Ps profitable. S19 XPs very profitable. So I wouldn't be surprised into this September-October trough that we actually see this market come back down and start flirting with these cost of production levels again. And this is very similar to the way it went down last halving event. This is exactly what I expect to happen. Notice these were all the equipment that cycle. The S19 17s at that point were like the really sexy sort of low cost equipment. I think the S19s just came on the market. And notice 6 months prior to the halving event, right? There's March, and you can see the halving event there was in May. So actually, you could even argue that December here was 6 months. We had, of course, the COVID sort of sickness, crisis, all that kind of stuff manufactured. Oh, let's not open that can of worms. Point of the matter here is down into this cost of production window, that was a no-brainer. I don't even really have a problem just putting yourself on a dollar cost averaging plan through this window. You're probably going to buy a little bit expensive. You're going to buy a little bit cheap, but in essence, you're going to get in right around that 6 months prior to the halving. There is the halving event. You can see how the cost of production, basically jumped up for all of these mining equipment. And of course, there's the next bull market. And that's pretty much what I'm expecting next spring and fall. So I don't see any reason why this should change. It seems perfectly logical to me. So S19s, I think they're old history, and anybody running, or did it again, S17s are old. Anybody running S17, you're losing money. Down in here, and this is basically around sort of 10 to 15,000. I think right now, as it stands, is value. So, the issue here, and of course, you could make the argument with all this sort of Bitcoin ETF and all that kind of fun stuff. Is the Bitcoin price right now up at this 30,000 area? Is it trading at value? No. Does Bitcoin itself even care that it's trading at 30,000 or 27,000 or even 20,000 or 35,000? No, it does not care. The only thing that matters is that Bitcoin must absolutely be above these cost of production numbers. It must, or else the whole damn story falls apart. So that's what I think is going to happen here is, in these trophy type sort of environments, they can screw around with price. They can have, this seasonal correction window. Price was 30,000. They brought it all the way down to 24,000. And in the end of the day, what is that? It's a 20% haircut. Does Bitcoin give a rat's ass? Doesn't care at all. Doesn't make any difference to Bitcoin whatsoever. And in a heartbeat, oh, BlackRock's going to launch an ETF. They can literally jump it up 25%. Does Bitcoin care? Doesn't care a rat's ass. Is this value? Absolutely not. Could they knock this thing down? $20,000 a Bitcoin here? Yes, they could. So this is just trading purely on momentum right now. That's all. Nothing more, nothing less. So I don't know whether that helps answer your question. As long as we stick with POW, I don't think anything changes. And what I see happening in the market is actually just business as usual. On top of all this, what I see within the Schultcoin space is there really aren't that many names that are POW. There aren't that many names that you can say this coin is worth this much because this is how much it costs to mine these coins. And instead of going and buying the coins in the marketplace, I'm just going to go buy a bunch of mining rigs and I'm just going to go mine these coins and I'm going to get paid what the cost of production is. That's how much I'm going to pay to buy these coins. You don't hear that story. What you hear is, oh, gas fee this and DeFi that and token this and token economics and just a whole bunch of gobbledygook that to me says there's no value to any of this. None. Zero. Zilch. And what scares you about, these kind of momentum markets is, this guy, Vitalik, he has publicly come out and said, and he explicitly said it when we were up here, hey, you guys are bidding up the price of my damn coin. You're making my supercomputer so expensive that the world can't use it. Well, that's an anecdote that, hey, maybe price is a little bit high. And sure enough, boom. Now, you just had Shanghai, and I get the distinct impression that's actually what topped this market was that Shanghai event. But at the same time, too, I'm still having a very, very difficult time trying to figure out how you actually put a monetary value on one of these Ethereums. I still can't really figure it out other than, well, how motivated are you to buy something in DeFi? And if you're super motivated, you're going to pay a high gas fee to participate in this story. And it's the gas fees that define whether, what the value of this network is. I don't really like that story. I think it's a shell game. It's a greater fool's theory game. And whoever gets caught, buying Doge when Alan is going on Saturday Night Live, and all of the YouTubers are absolutely over the top shilling, and it's just a circle jerk orgy. Oh, we're all going to get rich buying Doge at 75 cents, which is just utter stupidity. This is the same conversation. You chase a market that's gone parabolic straight up, and then you get a lot of people in the public that actually come out and say, oh, you know what? Technical analysis doesn't matter. Those chart guys, they're idiots. They don't know what they're talking about. That's the kind of anecdotal stuff. When I hear that, it's like, uh-oh, we got trouble, folks. Is this a bias kind of conversation? I'll tell you right now, I want to buy 32 Ethereums for my son so that he has an income for the rest of his life. And I've explicitly said that I want to. But the problem is that even now, if I really wanted to invest, well, I'd be a hypocrite if I said that I was going to go and buy all of his 32 Ethereums up here when you can see where reload zones are. You can see where long-term trend lines are. Really, I shouldn't be buying anything up there. And I should just be waiting for the price to come back down into these reload zones. And unfortunately, that's what I have to do. How on earth do you actually put like a fundamental valuation on one of these Ethereums? I don't know. And if somebody actually can figure this out and tell me the mathematical formula, I'll come and kiss you in person, give you a big hug, because I have yet to figure this out. I know a lot of people go, "Oh yeah, well, see, it's a gas fee," but that's not enough, in my opinion. And if anything, when I'm a cheap ass, right? I don't want to pay any gas fees. So you have really, really high gas fees, and if anything, what that tells me is you're going to have a whole bunch of competition that's going to come out of the woodwork, and because they see that the fee to use Ethereum is so expensive that there's room for competition in the marketplace. I don't know. It's a tough one. I'm not going to say it's easy. All I will say, though, is if I'm going to buy Ethereum as it is right now, I could see that this is like an inverted head and shoulders, and we work our way up top here because it is the summer silly season. I also see that it looks like there's a bull div, lower lows, higher lows. So I see that there is a bull div here, and that might help that inverted head and shoulders and push price up. I also see too, based on this whole sort of trend line kind of thinking, that we could even do like a channel, and the top of this channel appears to be there to there, maybe up against there, like somewhere up. Actually, it looks like maybe that's there. Oh, no, screwed that up. There. There. So that's also up here, which would also correspond with that inverted head and shoulders. A nice stab up top here. So, through the summer silly season, I could see that. If anything, like I said, Litecoin's going halving. Litecoin's going parabolic right now. It's getting ready for its sort of pre-halving peak, wherever the hell it is. You can also see the start of a bear div here. So we'll see if and when this does confirm. And then you can also see that Willie isn't quite stupid just yet, but he's getting there. So if anything, what I'm thinking here is we're closer to the end of the move, which is some sort of push up top here. Maybe this is like, could see this being like an AB. CD. It's something backwards there, I think. There we go. Don't really like the entry, but live by the sword, die by the sword. That would take us up into this high, which would make perfect sense. It's perfectly logical as well too. We could do chaos theory off of this range, which also takes us up into that level. So, and actually our level 4, any level 4ers who's watching this right now, we talked about bull call spreads with you guys in level 4. So I like the idea of buying the call option, right? The 2130 call, and then writing this 466 call, something along those lines for a bull call spread, net debit credit debit spread, right? Something along those lines. You get the pop up into here. This near term option on that move, it will go parabolic. But this out of the money option, it will go like this until it gets close to in the money. Then once it starts getting close to the money, then it will go parabolic. So what you really want to do is you want to, if you're, bull call spread trader, you want to capture that rate of change of the spreads, that difference. So if anything, you level 4s, you got another quick little tutorial on spread trades by the 2.618. this will be a bull A, B, C, D. So that's the level that we expect this market to go into. And you should be able to get your double, sell 2/3, sell 3/4 of that on that move. And then you got your free trade. If this thing does go parabolic, great. You're riding a free trade. So anyway, that's probably the trade if I saw it developing here. But at the same time too, I don't know whether I really like that setup. But anyway, it is what it is. So as Litecoin goes into that parabolic event, I could see this thing pop up here. This is a terrible trade location for a guy like me, and I don't really have a very good setup here. So it's certainly not a trade I would consider, but I could understand how this would play out given that. So I get the impression that we're going through sort of the pre-summer silly season. We got the Litecoin halving event happening in August, so that means that probably somewhere around this first or second week of July, we actually get this sort of blow off top that actually solidifies the top. Has Bitcoin actually done its thing? I don't know. It's tough to say. There might be one more push higher here. That could very easily be the case. It feels as though the market wants to get up into the 38.2s and the 50% levels of off the whole range. And actually, to answer your question here, David, I don't see anything out of the ordinary here. I think institutional players, Microsoft, for instance, they actually said that they came into Bitcoin back in 2015. So I think Goldman Sachs came into Bitcoin and crypto in 2011. So I think all the major institutional players, they are involved in Bitcoin to whatever degree they would be. Rothschilds told you they bought Bitcoin at around $1,000. So I think they're already in. I think we're playing politics around the US ETF that can be bought and sold for things like retirement accounts. I think that's entirely political. But there's Bitcoin ETFs in Canada. There's Bitcoin ETFs in Europe. There are Bitcoin ETFs that trade off of futures markets down in the States. So if you were a hedge fund manager and you wanted exposure through the ETF market, you could. So I think that institutions are here. The issue here, though, is that we're heading into a halvening cycle. We know that we're in the bottoming part of this cycle as well, too. And I would show you the money cycle, but of course, TradingView screwed us up there. But, if you come and you read our awesome possum blog, which is just totally awesome, then you'd know why we at TRI are thinking bottoms for 2023, better cycles, and all that kind of fun stuff. So if 2023 is a down year, who can tell me what are institutional investors doing right now in Bitcoin? This is a pretty important question. I hope you understand this. And who can answer this? Can anybody answer this? Zugi says, got to go. Thanks for the show. Bye, KMD. Responsibly. Eddie says, selling dollars. Good. Good, Deborn. Buying. Is that Derek? I think that Nuri says buying. Good. Constantine says buying. Good. Good, Cole. Very good. Excellent. Excellent connection there. If the institutions, and I think we've got the general consensus that institutions would be buying into these down markets. It's what they do. Josh, nice one. Then who are they buying off of? Are they buying off of each other? Do institutions buy their assets off of other institutions? Not likely. Usually they work in, collusion. They're buying off of the public. So that means that the public must be selling. As Chris says here, shaking out the public. That's what the institutions are doing. So does it make sense that SECs and stuff are going to be used to inject a bunch of fear into the public? Makes sense to me. If you feel like you got value out of this, please hit the like button, subscribe, tell a friend, please. Appreciate it. So I like the idea that you should be accumulating here. See, maybe we'll finish off this with what letter of the alphabet does Brian like to see to buy? That's a good observation, Omar. Always remember the tax man. Brian likes to buy W's. What did Brian say seasonally about the end of July, or excuse me, the end of June, beginning of July, first week or two of July? Is that a buying window or a selling window? If we were supposed to sell in May and walk away, what are we supposed to do the first or second week of July? And should it surprise us to see W's coming in on these charts as we work our way out of June and into July? I don't think it should surprise us. Interesting how even Mr. SEC absolutely hates him. He's even trying to W out here. There's Bitcoin. I think Bitcoin's trying to put in a bull flag here, but we'll see what happens. But I see a lot of uppy here. This is our top 30 list. This is one thing that I like to do, which makes life really easy, is you just pop on the website. You know, if you subscribe to the matrix, the dashboard, this is basically our crypto universe and all of our signaling systems. I can get a really quick view at who's the leaders of the market. Obviously, there's LTC, ETH, DOT, Trex, Uni, right? Interesting. ADA, ARB. I don't know what ARB is, but sure looks like the system likes ARB. There's BNB. Remember we were talking about the W there, right? Here is the sort of top 30 names in the crypto verse. And what's really cool about this is you can just go on like the weekly commodity trend survey if you want. I mean, there's a number of different ways you can do this. But you know, here is the weekly commodity trend survey. Actually, which is the way I want to do this? That's one way you can see that top 30 list. Here is the overview page. Of course, we can go right to the crypto top 30 from here. We can also go crypto top 30 from here. A number of different ways for you to access this information. But there is the algo and all the names. And then, like I said, what's super cool is you can just sit and just surf through the names. The system just pulls it up and you just say, all right, can I please see a W? And oh, look at ADA. Is anybody in the public talking about ADA right now? Look at that. I mean, isn't that a triple bottom that's coming in there? Oh my goodness. I mean, it's just that simple, right? There's that BNB coin I was telling you about. I mean, is that not a W? Sure looks like it's trying to come in. Pay attention. All right. So that is why I love using this site. It makes it so easy for you to just surf through. Matic, do you think you should be paying attention? This W is already actually fired. That's a buy right there, folks. It's just staring you right in the face. I mean, I've already loaded up on all my Canasta Club names. So all I'm going to be doing is just adding. I've got like 30 different names here. So I've got basically my LOL club list. Here's all my different names. Hell, I'll ride Alan. Alan's Wing out. And I even have some of these, you know, AI kind of names, some old names, some names that are dear to my heart, right? But anyway, I've got basically my shopping list all ready to go. So, you know, are you taking advantage of 2023 and are you accumulating? And now that we're finally out of that seasonal ugly window, can you start hunting W's? Can you bang out halves on doubles? Maybe you ought to bang out half on 2.618. And then that way, you keep the 2. That's your double, and the 0.618 goes to your local government. Thank you very much for absolutely nothing. But that's just the way this human slave species is built, right? Anyway. All right. So I guess really to answer your question here, I don't see anything out of the ordinary here on any of this. It just seems so, if anything, I hate to say it, this just seems so stunningly cliche. I mean, almost so cliche that you don't even believe it because it's just so perfectly telegraphed. So, who's going to join me here? You know, Eddie is Eddie Eddie says, I'm not sure you've loaded enough. So who wants to join me? I mean, we're going to go and buy this goddamn European TRI campus at the end of this little old lady canasta club experiment. That was the whole point of this. Eddie, are you still on board with me? If you go make $1 million from all this, are you in? I mean, that was the whole point of this. Chris, I'm sure you're part of it. Rush, are you still here? Yeah, he's still here. Part of it. I mean, that was the whole point of putting this together, was that we were going to go make a pile of money in the Shultcoin land and take the proceeds to buy TRI a campus here. So, you know, our plan hasn't changed, but the issue here is you got to execute the plan. And 2023 is a plan accumulation year. And if anything, here, awesome Gog, are you? Do I know you by a different name on the site? Did you ever meet French Lady? Because I want French Lady's home. I've got about half of the money myself. It's just sitting there in the bank collecting interest. And I was dependent on the rest of the team to buy the other half. But hey, if we go make $1 million in crypto here, yeah, maybe I'll just buy the whole damn place myself. Anyway. French Lady. Oh, French. What's that? That's not a picture of a lady. That's a picture of a cow. What? French vaca. Yum, yum. But like this KMD, I mean, it's just sitting there. I mean, do you want to participate in this? Yes, I am long. It's up to you. I can't, I can lead a horse to water, but can't make it eat peanut butter. Okay, so those are the 2 questions that were asked here. Hopefully I spoke to them. Hopefully I gave you a pretty good idea. I mean, long and short of it, David, I don't see anything changed here at all whatsoever. I haven't seen anything changed at all. The issue ultimately here is going to be what is the tone from the Fed when they're done raising interest rates? That's what we have to hear. We are done. We've gone and broken something. I watched a video out of China, and it turns out that like all of the shopping malls in all of the major Chinese cities, they're all empty. They're all broken. The stores are all boarded up. I wouldn't be surprised if you actually hear that China is actually collapsing. They're not going to publicly come out and say it, but I think they're toast with this interest rate policy out of the U.S. It's just a question of time. I think that the Russian, that's just you can't even believe any of the data coming out of Russia. That economy's toast. It's over there. Absolute disaster. It's going to take decades for them to recover. I would imagine a lot of Eastern Europe is just like, well, we're not doing anything. And of course, the Americans have cranked up interest rates. Now the Western Europeans, they're cranking up interest rates. That's going to bankrupt all of the Eastern European countries. They don't have any money. They're up to their tits in debt. I think that, socialist drama teachers, substitute drama teachers at that, they haven't got a clue about economics. They don't understand how money actually works. And what I'm starting to hear in my country is that the rhetoric that hey, let's go and screw the banks because it's all their fault. I wouldn't be surprised if substitute drama teachers actually turn this around and actually even start saying, hey, look at, I'm a guy of the people. Yeah, let's go and hang all the banksters and let's hang them by their feet. And I'll give you a stick and you can come up and whack the banksters for free on Canada Day. Probably be like on like August Gay Day or something like that. I wouldn't be surprised if that's coming down the pike. So strap on your seatbelts, folks. The latter part of this 2020s, it's going to be one hell of a wild ride. And oh, by the way, who's looming? The end of 2024. Is there an orange toupee floating out there that might just all of a sudden come storming back into power? Uh-oh. Dun, dun, dun. Cheeto Jesus, is that his name? All right, folks. Oh my God, it's already quarter after. Chris, you got to bark at me. Fuck, I'm already late. I got to get out of here. All right, have yourselves a great day. Got to head out and give the boy a good afternoon. PMA for the win. All the best. And Chris, if you could take us on out of here. Talk to you later. Bye for now.